Welcome back. The stock of the day on the way down is HDFC Bank. Undoubtedly, the street is disappointed with the Q1 update. And considering that in the last few months, the stock had rallied from levels of 1450 all the way to 750, it's retraced in the last 2 days. Yesterday too, perhaps markets got a whiff of the Q1 update. It's going to be soft. It sold off 2.5%, and today it's seen another 4% plus fall. To talk more about, the financial sector, what we should expect in Q1, we now have with us Nitin Aggarwal from Motilal Oswal Financial Services. Nitin, thank you very much for joining in on the right day. First, tell us about HDFC Bank. Even Q4 was disappointing, and now this looks like another weak print. Is this tracking lower than your own estimates?
Yes, hi, good morning. So yes, HDFC Bank has reported a weak business update. And while all eyes were on deposits, because lending, we all have been building in some moderation, given the compulsions that the bank has around CD ratio. But with deposit base holding flat, that has come in as a slight negative surprise. Because while 1Q is a seasonally a weak quarter, and we did see a very strong fourth quarter from the bank with a very strong built-up on even the current accounts. So some of which has unwound this quarter. So that has led to this impact. But the general expectation was still around some bit growth on the deposits, which hasn't really come through, and that caused this negative reaction on the stock.
But HDFC Bank has completely given up that MSCI related pop that it had at the beginning of the week. So week to date, HDFC Bank is now lower. It's down 1.5% on a week to date basis. And this week, we've seen some of the other private sector financial banks like an ICICI Bank outperform. Even Kotak Mahindra Bank has come in for some amount of buying. How are the valuations of HDFC Bank? I think it's now about 2+ times price to book value. How do the valuations stack up? And compare HDFC Bank versus what the other banks are likely to report.
Yeah, sure. So yes, HDFC Bank, while yes, it has lost a lot of gains, but if you look back, like last 1 month, the bank was continuously moving up. So we did see like a buying coming in, and from 1450, the stock moved up to almost 1750, and now we have seen some retracement to that. And I think the expectations around business growth will need to be continuously calibrated, because while on the last results call, management indicated that they don't really want to guide anything around business growth, but now seeing a sort of a weak start to the year with loan growth being negative Q on Q, one will need to again review the growth estimates. So as for us, we are looking at a 12.5% loan growth in our numbers for FY25, and we're reviewing that alongside the results.
How much do you think the number could come down by? 12.5% loan growth estimate.
There is a possibility that it can come down by another 100 to 150 basis points, but it's not very easy to say, because bank has indicated that it will want to grow at least closer to the system run rate. So maybe a few percentage point deviation is okay, but if the compulsions around CD ratio and the bank's own intent to make this ratio move a lot much in favor in a rapid way comes through, then you will see a slower growth also. That is not ruled out. So which is where something that we have to watch out. But besides this ratio, if you look at the other progress that the bank is making around the composition of loan book, that decline has happened mainly from corporate. The rest of the segments, be it retail or the other segments, CRB, they have all grown on a sequential basis. So which is where the implication of this on the profitability will still be limited. But yes, on the growth part, HDFC Bank is looking to have a slower growth versus the other leading private banks in the initial years.
Is there a possibility that this weak deposit momentum seen in HDFC Bank could be seen with the other large banks too? And what have you made of the Q1 updates that we've got so far?
Yeah, so I will say that while yes, Q1 is a seasonally a weak quarter, and you will see therefore more like a range-bound growth in deposits, but we are not building in a flattish deposit numbers for other private banks. HDFC may be still a case wherein Q4 was very, very strong. You had a very strong current account built up, and that has led to some bit of this fall on a Q-on-Q basis. If you look at on an average basis that the management has mentioned in their press release, there is still a reasonable growth on a average deposit basis for the quarter to quarter. But other banks, if you look at who have come up with a business update, Federal has already reported a very good number, 5% plus Q-on-Q deposit growth. And even for other banks like ICICI or Axis, we are building in some bit growth, a reasonable growth to come through on a sequential basis. So we will still think that HDFC Bank numbers are more like a one-off and not a representation for how we are expecting for the other banks.
What about an RBL bank? Bandhan Bank has also lost, ground this entire week. You've got PNB, the first amongst the few PSU banks which have come out with a Q1 update. What are the key trends?
So overall, business growth trajectory, I will say, is on the lending side relatively better, I will say, with Federal Bank reporting a 5% plus growth, PNB reporting a very strong 5% Q-on-Q advances growth. You compare it to what the bank guides for the full year, they have achieved almost half the target this quarter itself of that. So it's a very good start to the year from PNB. And RBL, slightly slower start on the advances, but 3% Q-on-Q growth in advances and slight decline in deposits is what they have reported. And that again comes on the back of a very strong deposit growth that the bank reported in the fourth quarter. So we still believe that on a full year basis, bank is on track to report high teens growth in FY25 on the lending side. And Bandhan, I think while yes, the first Q is like a seasonal quarter and Bandhan is generally a little more vulnerable to that, given the nature of the business that they do. But the volatility in their business also has come down. So if you look at the loan book, actually has increased a bit, like 0.7% Q on Q this quarter. Otherwise, usually it's a decline in the first quarter for Bandhan. So that's not such a bad outcome, at least on the lending side. And we are looking at again high teens growth from Bandhan also to come through in the year.
So your top picks are ICICI Bank, HDFC Bank, State Bank of India, and Federal Bank, right? These are the top 4 recommendations in the banking pack.
Yes.
If you had to recommend one, where is it that you see maximum upside?
So ICICI Bank certainly is like a bank of choice at this moment, and the bank has been performing well over the years. It is one of the best positioned bank when it comes to CD ratio and the way they are poised for growth, wherein we are estimating the high teens growth to continue almost to the tune of 17.5%, 18% CAGR growth over 25 and 26. And in context to that, the valuations still look very attractive overall. So we continue to like ICICI as a top choice in the sector.
And is Bajaj Finance a company that you look at?
Yes, we cover that. And my colleague, of course, covers Bajaj Finance within the NBFC space.
So your colleague collects. All right.
Yes.
Got it. Thank you, Nitin, for joining in and throwing light on what's happened with the banking sector this week. We need to slip into a very short break. On the other side, we'll get you more on the market. Stay tuned.